Hi, and welcome to the Stock Scores Market Minutes for December 24th, 2018. This week we're going to talk about the importance of not fighting the market. The overall market is a powerful force that really should never be ignored. We should let the direction of the overall market and its component sectors determine your trading approach. If the market is going up in general, then you want to focus on buying. If the market is in a downward trend, focus on short selling. If the market is normal, then you want to focus on individual stocks trading abnormally. However, if the market is abnormal, as it has been for the last couple of months, you want to really focus on the market itself and simply trading in the direction of the market trend. So since we have been in a correction since early in October, the focus should have been on short selling most of the time. It makes a lot more sense when we look at a chart, as it always does. Here we had a normal market where the market was trending higher. And in that case, you could go long or short, prefer to be long because the trend was up. But the market itself wasn't a major force, and you can tell because the height of the daily candles was not very tall. However, since October 4th, we've had a general move down in the market. But notice also that the height of the candles has been a lot taller. And that shows us that the market has been very abnormal. And so in that case, you want to trade with the market for the period that you're trading. So if you're a day trader, on this particular day, you would want to be short. If you are a swing trader during this period, you'd want to be short. This period long, and short. And if you are a position trader holding longer term positions, then once that down or upward trend line was broken back here, then you'd want to generally be short of the market since your hold period has carried over through a time when the market has been heading lower. All right, let's get into this week's market analysis. It was a tumultuous week as stocks continued their correction, breaking down through that support level that we talked about last week and the week prior. And so the sellers are really in control of the market. You can see that by the fact that we have falling tops. We are in a general downward trend. We are quite far below the downward trend line, which means that investors are getting a little emotional, perhaps panic setting in. And that is usually comes shortly before the market bounces, much like it did back here, where you get a little bounce back up to the trend line. Wouldn't surprise me if we see that sometime in the next few trading days. Of course, with the holidays, there will be market closures on Tuesday, but we still have a few days left in the year before the 2018 is over, and we could see that bounce back. Looking at the longer term chart, we had that first initial break of the upward trend line back in October, and then the longer term weekly upward trend line just a few weeks ago. And now we are also breaking through this horizontal zone that we talked about last week, and that a pretty critical one. And so my thought now is that we are going to see the market continue lower, probably into the 220 to 230 zone on the SPY. And the reason I picked that number is if you were to look at a monthly chart going back 20 years, that's really where the long-term upward trend line is. And I think that is a place where the market can find some support. So still, 8 to 10% downside from where we are. And therefore, you got to be pretty cautious going into the next few weeks. On to the Russell 2000. And this time I've got a daily chart. And again, just to show the emotion that's in the market, we can plot a trend line. You can see price runs away from the trend, it comes back, runs away, comes back. We have really run away to the downside, and so that shows that selling is getting a little bit irrational and therefore likely to bounce back, but doesn't mean it will bounce back tomorrow. It may take some time before it bounces back, but there is a tremendous opportunity here because investors are selling without reference to the fundamental value. They are selling out of panic. And that creates a great opportunity. So what you want to watch for is a day when the market hits a new low but manages to close above its open. That is a signal that it's going to bounce back and try to come back to that downward trend line. And a good trade in that. So there's really good opportunity there. Now on to the Canadian markets and looking at the Toronto Stock Exchange. Much the same picture. We have that downward trend line. Prices have fallen away from the trend line, meaning they are oversold. But there is really no sign of a bounce yet. So again, if the market hits a new low and then manages to close up above its open on a daily chart, then we should see a bounce back in the near term. Until then, remain pessimistic. Longer term chart, you can see that that important horizontal support zone that I've talked about many times in recent months has now been broken, and that should lead to lower prices. Next area of support is going to be down there, which is where we're at right now. May bounce off of that near term, and then we're heading down toward that zone there. On to the TSX Venture, which has been pretty ugly for a number of months, and it continues to be that way. Downward trend line, getting quite oversold. That means there's bargains out there in the market. The only question is, when does the bargain change direction? And until you see a little bit of buyer support where we actually get a close above the open, I recommend some caution, but there is opportunity here. We just got to time it right. On to currencies, US dollar held its own this week, didn't really go much up or down, and therefore it remains in a bullish trend. The Canadian dollar, however, did suffer. It has broken through this support zone and now looks like it's headed toward that $72 mark on the FXC, and at that point it should get some support and bounce. Interest rates, well, we had another move to the upside as money looks for safety in the bond market, and that move to the upside means that interest rates have fallen. We are now coming into that horizontal resistance where I expect the bond market will get stuck. Again, there's a lot of signs here that the market is going to reverse its weakness that we have seen lately, but it hasn't happened yet. So just something to keep an eye out for, looking for that trend reversal in stocks, but also in the bond market. And then commodities, gold with that weakness in stocks has been a bit of a safe haven. We can see that we broke through some resistance here. We're generally in an upward trending market. I think gold is a safe haven while the market corrects. I don't know that this strength will last if the market stabilizes. So if the market does in fact stabilize and start to move up again, I think money is going to come back out of gold. And so you should treat gold simply as a trade that lasts while the market is correcting, but not necessarily for longer. And final chart here is the oil chart, and another dismal week for oil. You can see that big sell-off through this short little consolidation we had for the last 3 weeks, now coming into support here. Again, should bounce in the next week or two, but until it does, don't try to step in front of this freight train that's headed lower. So my ratings then, bearish on US and Canadian stocks, gold bullish on both time frames, oil bearish on both time frames. Support broken again this week, leading to another round of strong selling in stocks and oil. Panic is setting in, and that will create great buying opportunities. It's just important to wait for the downward trend to be broken rather than anticipate it. And I recommend watching for that downward trend line to break on the 30 or 60-minute chart first, and then the daily chart, and then the weekly chart. But we're going to see it because it's so parabolic to the downside. Watch those intraday charts for a break of trend. Gold is a safe haven, but really something to consider. And we should just consider it as a trade on market weakness and not necessarily for a longer term move. All right, let's take a look at the trade of the week. And I wasn't trading this week because I'm away on vacation. However, I did put this as one of my highlighted stocks to watch last week. And I just wanted to show you sort of how you trade this. So this is the RWM, Russell 2000 Pro Shares, which means it goes up when the small cap sector, the Russell 2000, goes down. And what you want to look for are those tall candles that break from low volatility. So we had one right here, and that is a break from what's called a pennant pattern. I can draw it out for you, something like that. And that led to this nice move to the upside. Then we had another flag, and look at that tall candle there breaking on Friday for a nice trade. So anywhere you see these tall candles relative to the move coming into them, those are good trade setups for a swing or even a day trade. That's a great way to trade this volatility that we have in the market, is wait for things to compress in terms of volatility. We can see the compression of volatility here, and then look for that tall candle breaking out of the compressed price volatility as a cue to enter and trade it for the run higher. Well, that has been the Stock Scores Market Minutes for December 24th. Want to wish everyone the best for the holiday season. Have a great week in the market, and we'll see you in 2019. Trade well.